What is going on, team, and welcome back to yet another video on my YouTube channel. Now, I have previously made plenty of videos on how you can increase your win rate by using ICT concepts, and this right here is another video on how you can increase your win rate using ICT concepts simply by utilizing this simple change. Now, I have previously made videos on the SMT divergence, and this is going to be yet another video on the SMT. And the reason for this is simply because of how important it is. Since my previous video on the SMT, I have learned a lot, and I'm now going to share with you exactly how I utilize it in my day-to-day trading. So without further ado, let me show you exactly what I'm talking about on the charts. So before we go ahead and move on to actual price action, I am simply going to go over the SMT divergence so that everyone understands what I'm talking about. So for the SMT divergence to appear, you must have two correlated pairs. Now in this case, I'm using the NASDAQ 100 and the S&P 500. Simply because these are the two that I'm the most familiar with. And the SMT divergence is simply when you have the two correlated pairs, we have a higher high, higher high, higher high, and we have a higher high, higher high, higher low, right? So right here we have an SMT divergence between the NASDAQ and the S&P 500, simply because they are correlated pairs. They should ideally move completely correlated. And when the NASDAQ takes out the high, and the S&P 500 fails to take out the high, that is an SMT. Well, is that not just any regular liquidity sweep? No, it is not, okay? It is much more significant than your average liquidity sweep, and you can go ahead and look at this throughout historical data. Almost all the big moves with a lot of volume behind them have an SMT divergence at the beginning. So the SMT divergence is the easiest way to spot and catch reversals. So if you are not already looking for an SMT divergence as one of the criteria for you to enter a trade, I'm sorry to say you are simply doing something wrong in my opinion. Now, am I saying that you cannot be profitable without the SMT? No, I am not. But I'm saying such a simple change in your trading can make such a difference, so why not do it? The only reason why people won't do it is because they are not patient enough to wait for an SMT. However, literally, if you traded SMTs alone, that is a profitable strategy right there, and it just makes all the other setups that you take much higher probability. So if you often find yourself trading certain liquidity sweep that ends up not being liquidity sweeps and price just continues to rally higher, try to use liquidity sweep that has an SMT supporting it. So regular liquidity sweep, no. Liquidity sweeps that formed an SMT, yes. And then come back to this comment section and tell me if the liquidity sweep now suddenly started working for you. Now, obviously, it's the same with a bullish SMT, right? Let's say the S&P 500 took out this low and the NASDAQ failed to take out the low. That right there is a bullish SMT. So I hope everybody now understands what an SMT is and the importance of it. Now I'm going to show you on an actual chart how I personally use it myself. Now, if you know anything about me, you know that I trade liquidity sweeps, highs and lows, turtle soup, whatever you want to call it. And I get a lot of questions as to how I find lows that are going to work and how I find highs that are going to work. So right here is a great example. On a 5-minute chart on the NASDAQ, we have a low being made here that we obviously swept right here. Now, on the S&P 500, we have that same low, and we failed to come down and sweep that low. Obviously, the NASDAQ swept it. The S&P 500 failed to sweep it. So right there's an SMT divergence and a great example of something that I would do in my day-to-day trading. So how do I know that this SMT is going to hold? Well, it all stems from the higher time frame, right? I have to be bullish on the higher time frame. If I am, then this SMT should ideally hold. And if I go to a higher time frame, like a 15-minute time frame, I can see that this also overlaps with a 15-minute order block. So we have a low that was created inside of a PD array. We now get a sweep of that low and form an SMT divergence with that low. And that's exactly when I enter. As soon as NASDAQ sweeps the low, I know before NQ sweeps the low that we're going to have an SMT. Now, how do I know this? Well, I simply take a look at the S&P and I take a look at the NASDAQ and I see that the S&P is much further up than the NASDAQ, which means that the NASDAQ is likely going to hit the low before ES is going to hit it. And therefore, I can anticipate an SMT before it happens. So as soon as we sweep the low, I'm inside the trade. Now, why would I swoop this low or take this sell side liquidity sweep? Again, because of the SMT and because it's a 15-minute order block. So on a lower time frame, the trade would have looked something like this. SMT right here. The 15-minute order block is this thicker black line here. Now, what do we have with all of that? We have some low resistance liquidity that I'm expecting to get ran, right? So we play it out. And obviously we can see from ES that this just worked out perfectly, right? But something I want you all to understand is that I will typically take my trades off as soon as a new SMT forms. So I will likely enter on SMTs and I will likely exit on SMTs. So we formed an SMT at the low. Okay, as soon as ES sweeps the high, we form a bearish SMT. That's when I close my trade on the NASDAQ. So that is something I want you to all focus on. Enter on SMTs and exit on SMTs and watch how your win rate just skyrockets. Now, again, we have a great example right here for all the 2022 model traders. A lot of people have trouble finding success with the 2022 model. And I'm now going to tell you why most of the people are not successful with the 2022 model. As I told you, a lot of liquidity sweeps will simply not work if there's not an SMT backing up that liquidity sweep. Now, if we take a look right here, this is a classic 2022 model that a lot of people will probably take. Now, for what reason could I fairly trust this fair value gap? Well, the only reason why I trust this fair value gap to work is simply because at the top, we have an SMT between ES and NQ, right? That is the sole reason why I trust this fair value gap. Normally, I never trade the 2022 model. I do not like it. But when it is combined with an SMT divergence, the win rate of the 2022 model goes up a lot. So again, it is just one of the most simple and easiest changes you can make in your trading. It does require you to be a little bit more patient, but that is our job. And once you actually start incorporating these SMTs in your trading, you will just notice a huge difference if you are not doing it already. Now, again, we see it right here before this huge dump. What caused this huge dump? Obviously, we see it right here. It was an SMT between ES and NQ. So I'm not just telling you this to feed you useless information. This is actually how the market works. Behind every dump and behind every rally with a lot of volume behind it is going to be an SMT divergence. If you just focus on entering as soon as that SMT divergence appears and exiting as soon as a new one appears, it really does not get any more simple than that. And your win rate and consistency will just be way higher. So this was just a quick video of me explaining exactly how to use the SMT divergence and how I personally use it myself. All I do is find a low or high that is inside a higher time frame PD array. If we sweep the low and there is an SMT, I'm in. But that's not what you should be focusing on. What you should be focusing on is your own model and just applying that SMT to whatever model you're currently trading. So go ahead, try it out for a week or a month. Only place trades that are combined with an SMT and let me know how it goes. Thank you for watching, and I'll see you in the next video.